Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now we're looking for a potential, just a little bit lower low coming into the Japanese yen, and then we're looking for a little reversal or an uptrend. So that's one thing I wanted to share with you. So for the folks that are here today, it was nice to go over and say, all right, let me see your work. What have you done before? Did it come to fruition? And what's the next outlook? And this is just taking historic study of markets. That's what we do here. That's what I do with my company at nationalfutures.com. Looking at the Japanese yen and then making it a further step. If in December we notice that the market peaks out, it's now up to me to maybe look at secondary information or confirmation studies to look for a trigger. Now, what's interesting is the market in December this year actually did peak out. Notice what we also see here with the foreign currency. Very similar key, a double top in the market. The Japanese yen had a double top in the market based on a weekly chart. Very impressive. The December high, and we'll go back so that you can see this. Generally, the market peaks out in December, and it did this year. We saw a double top form in the market. And at that point, we're just waiting for a little bit of confirmation. And my trade system generates this little sell signal. That's what that orange triangle at the top here is. It's an orange sell signal. It generates on the close of the week. So as we look here, I want you to also notice what you see here. What you're looking at is support and resistance targets. And the market rallied back up to those targets. More importantly, it rallies back up to the moving average. Now, one thing I'd like to teach people is these little techniques about what we call snapbacks. Market regresses to the means. But if the market on a higher degree time frame is bearish, then we like to look at shorter term time frame sell signals. Let me repeat that. If the higher degree time frame is bearish, the market, or generates a sell signal, higher degree time frame could be a weekly chart, such as this. If the weekly chart generates a sell signal, then we like to look to trigger maybe shorter term trades to go with that longer term new trend direction or market condition, as I state. The market condition is bearish on a weekly, then look for daily sell signals. As you look at this chart, most people would say to themselves, hey, look at this uptrend. It's beautiful. This is a buy. The market's going up. It was a pullback. We want to go. It's looking like this thing's going up forever. But this little system that we designed and developed that I did actually says, no, this market's going down, and the first objective is probably right here at around this 106 area, right against these old highs, this old high, this area, this old low, and that's probably where we're going to be looking at targeting a price area to exit the trade. So if you're short, and if you've been short from approximately 112, and the market goes down to 106, that's a hefty little trade. One thing about this chart in front of you that you're looking at, this generated the weekly sell signal. The last time we had a buy signal was way down here. So let me tell you this. Any trend following system trader that has been in a trade long in this market since September actually, a trend follower is probably now looking to take a profit in this market. So we could see further downside. And we are coming to a seasonal time period where the market bottoms out. So both time and price we're targeting right in here. Interestingly enough, we almost hit that level today. This is the daily chart that we were using to our community and people that we were talking about, you can also see the double top as it shows up on this daily chart. And you can also notice that our intraday sell signals. Now these little hash marks that you see here are our predicted support and resistance targets on a daily basis. So if you're a position trader, the daily numbers aren't really all that effective for you. You'd want to use the longer term weekly numbers. If you're an intraday trader, then obviously it would help to uncover, is the longer term trend rolling over? Are we going from bullish to a bearish condition? And if so, I need to sell rallies. And then using daily pivot points is extremely effective in your trading approach. More importantly, if you can uncover some hidden value and say to yourself, gee, at least one target area, maybe 108 down to 106, somewhere in this zone, because this green is our predicted target level on a daily basis. We have this old low down in here, as we've showed you on the weekly chart. This could be a nice area for once the market gave those daily signals that coordinated against the weekly, then you could say to yourself, gee, I got a great opportunity of what to expect out of the market. So for investors and traders who have a hard time setting profit objectives, this is a phenomenal way of overcoming that obstacle. Now, this is actually this morning's trade session. Just for the record, to let you know, this is looking again at the daily Japanese yen. We hit today in the yen futures. It was quite an interesting day. The market continued to sell off from the time I put this presentation together to 106.47. Let me draw that in for you. This was the profit area, the shaded area here. The actual market hit a low today, and I'll fill this in for you. It would look more like this. There we go. That's about what the market looks like right now. So, because of the fact that we're close to the end of the month, the fact that the seasonalities in the Japanese yen dictate that the market generally makes a bottom this time of year, the fact that we are near an area of old highs, old lows, support and resistance area, this is an area that we would no longer want to be in the market. We've also departed too far off that trend line. So in essence, in the next week or two, I expect maybe we go down a little bit further, maybe we consolidate, but in the next week and a half, I'm expecting to see at least a recovery, and I would be looking for the market to regress to the means for a little bit of retracement. So if that's the case, notice that here, using the ISE's options, you can look at the currency options on the Japanese yen. They call it the YUK, the yen index. So YUK is the universal universal symbol in trading this. So notice that if we're expecting the market to bottom out, and if it trades in the opposite as the futures, all right, then we would want, if we're expecting the market to go up, then we would look for this to do what? Go down. And then we'd want to be looking at puts. So in the next few weeks, look for the seasonality for the YUK, or the Japanese yen, to take hold, as you can see here, and look for a retracement or reversal in the futures, which would mean the opposite for the index ISE Japanese yen options.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.